Oliver, what do you see as the big disappointment here and why the stock is reacting this way?
Hi, Sarah. Great being with you and Carl. Consumer discretionary softness is the headline here. In terms of the weakness of the traffic and the need for Target to achieve positive comps. So comps were negative 3.7. They were positive 3.8 at Walmart. Walmart's our best idea for the year as well. We think Walmart's business focused on value as well as grocery is benefiting Walmart. The big issue at Target is home, apparel, and hard lines. That's about 50% of the business. And as you mentioned, the consumer is very mixed and looking for bargains, looking for value. Target's very intensely focused on that, so we'll see in the year ahead. Expectations were fairly high. In terms of the fundamentals, this quarter they missed on SG&A, and guidance was reiterated, but we'll have to see if comps can turn positive, hopefully in second quarter and full year.
Well, they're putting a lot of faith in that forecast, 0 to 2% comps for next quarter. You know, Fidelki mentioned it on a call with me numerous times. I think they feel like they can do this. I guess the question is it enough when they're being compared to Walmart right now?
Yeah, what the company really needs to do, and they're focused on at Target, is offering clear values, that deal-worthy brand, 400 new products under $10, and launching lots of new products at $10 or less, 2,500 products. So really pushing on value, making sure the consumer understands that, and getting traffic in the stores. Target tends to be great at seasonal moments, but it needs more stable traffic. Furthermore, emphasizing the marketplace as well as digital advertising. Walmart has had a better time in terms of getting higher household income customers. That's been a big positive for Walmart, so we'll see. But it's a very consumer discretionary focused retailer in terms of Target. That's why it's been more vulnerable because, as you mentioned, the consumer's at a crossroads. The consumer's feeling really mixed despite low unemployment and despite nominal wage growth, which is outpacing inflation.
So how do they do that? I mean, the announcement about lower prices on 5,000 items, I think, might help. But you're right. It does seem that Walmart is getting that benefit of the higher income consumer trading down, and Target isn't.
Yeah, I think home, hardlines, and apparel. Fortunately, we're seeing better trends in apparel, meaning less negative, but still negative. Home and hardlines are other categories that need to work better. So the consumer has to feel better. Hopefully, interest rates are going to be cut on the horizon. That will be a positive for growth, too. And we're looking at macro indicators around home and home formation, given the exposure Target has. At the same time, what's in their operational control, being fast, convenient, drive up, the marketplace, digital advertising. They have to do a bit of everything, but product innovation, as well as their own brand portfolio, those will be important changes that they're making as well. The biggest change overall is emphasizing value. Shoppers don't always recognize Target for value, so that will be important for them to both execute on it and have customers recognize they have value. Traffic is the formula. Getting more consistent traffic is the formula for growth here.
So you're on hold at 175, I think, which is now sharply higher than where the stock is right now. What would change your mind?
Well, we're looking at this. We're hoping that these strategies will take hold and really yield positive comps. Our top ideas, Sarah, are Walmart, Costco, and Ulta. As you know, we've been big bulls on the beauty category in Ulta. And Walmart's a technology company, so rethinking Walmart as a tech company. And Costco, in many ways, is a software model with membership revenue and being globally focused on value. The other part of this, Sarah, strategically continues to be bifurcation. So Louis Vuitton is a top pick as well. The luxury end, in terms of the ability for luxury to raise prices, really exists there. So that's how we're thinking about it. We're optimistic. Target got less expensive today, and hopefully expectations are more moderate, given the print that we saw today, which was cautious.